Now, if you took out a business loan in the years before the financial crash, the chances are you'd have been offered what's known as an interest rate swap. The idea was that it worked pretty much like an insurance policy to protect a borrower if interest rates went up. But instead, rates went down, and borrowers soon discovered they were liable for penalties they claim they hadn't been told about. When firms began to fold, the Financial Services Authority stepped in and ordered the banks to conduct an urgent review. That was 6 months ago. But as our business correspondent Siobhan Kennedy now reports, very little seems to have changed.
On the shore of the Kent coast, an imposing Edwardian mansion. The Burlington Hotel has an illustrious past, but faces an uncertain future. It's all go in the kitchen here. There's 80 local businessmen coming for lunch. But times have been tough. This once thriving hotel is now threatened by a dispute with its bank, and it's taking its toll.
When you see everything that your family has worked towards for years, all of a sudden stop in effect, it's caused a lot of anxiety, heartache, as well as wanting to not deal with banks again, really.
4 years ago, Daniel and his father were offered a new loan to expand their business. They agreed, but here's where the problems begin. They say the bank insisted that to get the loan, they had to buy another financial product on top. That new product, they believed, was just like insurance, and the pressure was laid on with a hard sell. How? What did they say?
You've got to do it within this time, otherwise you lose it, and then it will be more expensive. You've got to do it now.
They signed up, but never really understood just how complex the product was. They're called interest rate swaps, and the idea is they would protect customers like Daniel from rising interest rates. A bit like a fixed-rate mortgage. You agree to pay a certain rate on your loan. Then if interest rates rise, you're protected. The problem is, most of these products were sold just before the financial crash, when interest rates tumbled. And that's when the hidden penalty payments began to kick in. To date, Daniel's paid over £750,000 in penalties and had to lay off staff. But most shocking of all, after getting involved in this crippling, complex financial product, the bank refused them the loan. So they're paying penalties on money they were never even allowed to borrow. The banks were investigated this year, and in June, the regulator, the FSA, ruled that there'd been serious failings in the sale of these products and told the banks to start an urgent review. Like businesses around the country, Daniel thought his bank, Barclays, would finally help and let him stop the payments. Yet 6 months on, nothing has changed.
As far as I'm concerned, if they've acknowledged that there's been mis-selling and we're complaining we are victims of a mis-selling, then at least stop the payments whilst there's a dispute going on. But no, that's been denied. We've asked them directly to Barclays, and all our offers have been refused, basically.
We contacted Barclays and they told us they'd worked closely with the hotel and that it was no longer in financial distress, and that where Barclays did not uphold the highest of standards, we will put things right. At least Daniel and his father still have a business. All the Grices have to show is a letter from the regulator saying a review is ongoing and could take up to a year. And this is what's left of their business after their bank, RBS, sent in the receivers. Empty warehouses on what was once a bustling industrial site they built up from scratch.
I can't take on anything for the future as such, because I don't know how long we'll be here or anything, for one thing.
We don't know if they're going to come tomorrow and, ask us to leave our home or anything, do we? It's like sitting on a time bomb, isn't it?
Even though all the banks promised they wouldn't shut down any firms while the regulator review was ongoing, the Grices say RBS has continued to sell off their property despite their pleas. And the regulator, the FSA, isn't doing anything to help. Do you feel terribly let down by the regulators?
Well, they're not in any hurry to do anything about the situation.
RBS said they wouldn't comment on this case, but went on to say, "We take our obligations under the agreement with the Financial Services Authority seriously and are satisfied that they have been complied with here."
Okay, chef, 5 turkey, 1 egg, 2 pork.
Back at the hotel, the Christmas party is in full swing. In attendance, the local and furious MP.
We're at a crucial stage now. The banks have admitted, I think, that they did wrong. I think it was really extortion by the banks to try and get as much money out of businesses as they could. And businesses like this one are paying hand over fist because of these swap agreements still. And that's what we've got to stop.
The argument reached Parliament today when he and a group of MPs met with the regulator to press the case for businesses struggling with the swap fees. The MP's main aim was to get the regulator to freeze all swap payments while the banks are in dispute with their customers, to give businesses some breathing room. The good news is the FSA told me today it was considering putting a hold on the payments. The bad news is no decision has yet been made. So time is still on the side of the banks for now. The 4 biggest have together put about £1 billion aside to deal with claims. The best guess right now is that there are 40,000 missold swaps. If even a fraction of these are paid out, the banks could need billions more, potentially dwarfing any other mis-selling scandal in recent history.
Well, we asked the Financial Services Authority and the banks involved to discuss the issues, but unfortunately no one was available. I am joined now, though, by Abhishek Sachdev, a former derivatives salesman who used to sell swaps himself, and he now advises businesses on how to handle missold swaps. So why is it taking the FSA so long to sort this problem?
There's really 3 key reasons. I mean, firstly, from April next year, a lot of businesses will no longer be able to take legal action against their bank on a no-win, no-fee basis. So the banks want to drag this process out. And secondly, this is a very, very complicated process, and it requires the banks to review tens and maybe sometimes hundreds of documents to review the case.
But if the banks are basically stringing this out, I mean, surely these extortionate fees should be cancelled in the meantime, shouldn't they?
And the banks have said that in some financial circumstances they will do that. The FSB and bully banks have called for this for quite a few months. But the banks, unfortunately, are going to judge which clients they can do this for. They should do it for everybody who's been missold, but there's no definition of what's been missold.
But it's in the bank's interest to string this out, drag their feet, presumably because they'll then have less to pay at the end.
Absolutely, because businesses only have 6 years to make a legal claim against the bank from when they took out the contract. So every day they drag it out, less and less claims can be made against the bank.
Well, you sold these things, presumably in good faith, but how aggressive do you think most banks were?
Yeah, I mean, these products can be appropriate if they're advised properly. The problem is what we've seen in a lot of cases, a huge amount of sales pressure was put on some clients to take these things out. Sometimes the swaps are much longer than the loan, and sometimes they're much larger than the loan, which is inappropriate if not advised properly.
But in the meantime, while all this delay is going on, businesses like the Burlington Hotel that we saw in the film there may well go under, mightn't they?
Yeah, and unfortunately some businesses have already gone under. They've gone into administration or receivership, for example, and they need urgent relief, which is why people like the FSB and bully banks are calling for this. But so far, the banks have been slow to act on this.
Abhishek Sachdev, thank you very much for joining us.
Thank you.